Welcome back to Trading 360. Alex Coffey in for Nicole Petalese. Time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein, the host of Futures and senior futures correspondent for the network, is here, as well as Alan Nuckman, the chief market strategist at bullseyesoption.com. We got this is gonna be fun. But let's start before we get to the individual stocks. I know you guys are excited to talk these different names: Coca-Cola, Las Vegas Sands, Clear Secure. But let's start with the market. Alan, I want to get your thoughts on it. Bounce back today,
right?
But I didn't know the market was allowed to go down. I saw some red on the screen last week.
Yeah, exactly. I think that's the feeling that people were getting. You got spoiled over a couple of months. And markets often pause, take a little break before we get to earnings. And obviously it was much needed after the extended move. Things got a little overdone, and they have to regroup before they can make another move. And a lot of the fundamentals are set up for more positive bullishness. But I'm excited about the earnings because the expectations have been tamped down. And so that really sets up for overachievement if we are in a bull market, which I believe.
And today lends credence to that. It was potentially, if today, of course, one day is not going to change anything. But I think I said this morning, me and Ben were on futures. Whenever there's a little weakness after there's been a prolonged period of rallies, it's always like, oh, is this the moment? Or is it just the healthy pullback that even bulls are calling for? Today looking like a little bit of credence that you may get just that healthy pullback, a little bit of bounce back, but we'll see. Let's talk some stock-specific stuff here. Coca-Cola, one of the names on your mind. As you said, you see maybe bull market continuing. Do you like a name like Coca-Cola, consumer staple, in that type of environment?
Well, I trade what I see, so I don't try not to think a whole lot when I look at the markets and individual stocks. And looking at Coca-Cola, Coca-Cola is down about 6% in the last 52 weeks, as opposed to the Dow made new all-time highs. So, for me, it's about risk-reward. And I do like the fact that it is off its highs, and it's been trading between 55 and 65 for about 3 years now. So the breakout target of this is 75. So it's a stock that looks to be set up. Now, I'm looking for the overall market to make another big move. If we take out those highs in the S&P, we got within 25 points, I guess, last week. Then we should be looking at S&P 5,000 and S&P 6,000 if you do a full V recovery of that sell-off that we've had in the past. So the way I'm looking to play here is with an in-the-money option. So for me, it's as much about the strategy as it is the stock. And so I'm looking at the June 55 call, trading for about 6. It's deep in the money. The stock's trading about 60. But what I see in this stock is what I want to look at on these charts today. Is I see 2 things. I see new lows were made in October, but not new highs in implied volatility. That's a sign of a sentiment shift. I see a bottom base in place, and we're right here above the 200-day moving average. That's positive. And lastly, I see a lot of leverage accumulation. So that's a signal that I look for that tells me that smart money sees something, and they're using options to build positions, bullish positions in this stock. So I want to follow that. Like I'm following, if you want to get into the fundamentals, I'm following Warren Buffett, which is not a bad thing to do.
Hasn't been historically, no doubt. And constructively as well. I mean, I know we got a week under our belt, but it's actually green on the year. Not a lot of names can say that. So you got a name that weathered the volatility of the 1 week. You talked about its underperformance over the last year. Strategy, of course, seeking to get that stock-like exposure to the upside. But it has the defined risk, of course, of
6 months, a 75 delta. It's deep in the money. The expiration break-even's $1 higher. And most importantly is the payoff. The payoff is significantly greater than buying the shares. You tie up less money. And a modest move, we get to 75. That option is, a couple 100%.
Yeah, you got an asymmetric setup here where you can make theoretically unlimited, and you got defined risk, break even certainly within a stone's throw.
I want to bring my friend Ben in here because that's his job, but it's a sideways chart. He's going to find a way to poke a hole in a sideways chart, but it has rallied significantly off the bottom.
Yeah, let's get some chart stuff here with Mr. Lichtenstein here. Excited to go through this.
Okay, well, as much as it pains me to agree with Alan on this instance, I'm going to begrudgingly. But let's begin first and foremost with a 5-minute time frame. You're going to see some strength here. You're going to see exactly what I look for. High conviction to the upside, and then acceptance, consolidation after a big move up. So on the left side of your screen, on again a more granular look at price activity, 5-minute time frame, you can see an area consolidation that formed last week around 58.75. into the big move up we saw Tuesday, and then Wednesday, Thursday, Friday, and currently balancing around 59.65. So the market's pretty comfortable at this level. Again, a bullish pattern on the 5-minute candle chart. Similar situation playing out on the hourlies. Alan mentioned that October low. I'm going to look at the daily candles in just a minute. I'll show you what he was talking about in terms of that low. It got severely rejected. But first and foremost, here's the move that we just looked at here. A small little blip on the radar, but a longer-term trend intact. As you take a look at the hourly candle chart, again, going back to the lows in the beginning of October, we were trading. That was down around 51.55. Let me see. I think this is the chart we're looking for. There it is. The areas of consolidation that formed at higher and higher levels along the way up. Taking another step back, Alan mentioned the October lows, which was a new low, taking out the lows that we had seen back in September, but the amount of time that we spent down there was limited, and that was a key test of an area of support that was established on the way up. Taking a look at the weekly candle chart, you can see 53 was significant, so briefly below it, but again, in the pattern that you see play out here in these longer-term trends, Alan, short-term rejection like that is going to be just that, short-term, right? By definition, that's an extreme that got tested, it failed. Up and through 60 right now opens up a door for retest of those highs that we saw back in April of 2022, if you remember, and that was up around 67, 68.
Yeah, good stuff. Vertical, horizontal phases. Been a lot of horizontal, but we'll see if it can make a recovery. Another one that you guys had on your minds here, Alan, is Las Vegas Sands. I see strategy similar.
Same thing. Yeah, I'm a stock substitutions trader. I'm looking at it as a better way to trade. I try and introduce people to using options, and this is the most simple, basic option strategy you can use, but it produces big payoffs. So I'm the anti-bro trader. You know, the bro traders, they buy the out-of-the-money options with too little time. This is boring oftentimes, and that's why we started with Coke. I mean, Coke typically is a boring stock, you know, but the strategy is boring as well, but it produces results, and it allows me to live my lifestyle. So I call them lifestyle options that I don't have to watch the markets minute by minute or even day by day, maybe just week by week, because I'm looking for the bigger picture. And when we go back to that Coke play, if it just gets back to that range top, you know, the option's going to gain 75%. I've got limited risk. I've got plenty of time, and I have the right to be long from a super low level.
I like this conversation because, hey, look, it's different for everybody. Everybody's got different goals, time horizons, expertise, etc. But for you, what you're describing is that this strategy provides you peace of mind with risk definition, but you didn't trade anything like a profit definition, or you have unlimited upside. It's going to perform theoretically pretty darn close to how stock shares would. And even just how you describe it, you're talking about the delta, you're talking about how it is replacing that stock in your mind. You're thinking about this as if it was the 100 shares of stock in terms of how exposed you are to the name, but you know deep down, you got a risk definition here. You're limited to the amount spent. It looks like you also go out quite a bit in time. I'm guessing that's for one, your time horizon, but also limit that time decay working against you.
Yeah, take time out of the equation. So if you think something's going to happen in 3 months, you buy 6 months. If you think something's going to happen in 3 months, in 1 month, you buy 3 months. So you take that time out of the equation. That's where people get themselves in trouble with options, is they buy too little time. So buy enough time to be right. Even if you don't need it, if I'm buying these in-the-money options, my expiration break even is going to be very tiny. And buying an extra couple months of time might cost me $50 or might cost me $75. And it's more than worth it to have that peace of mind. And like I said, make the markets work for you, so I'm not working as hard for the market.
Make it a little less binary, too. You're buying something that expires tomorrow, got to be right or you're wrong, you know what I mean? So, hey, Ben, talk to us about the chart, though, as well. I mean, I know these charts don't look the same, but there's some similarities between what we saw in Coca-Cola and what we see here in Las Vegas Sands.
There are on the smaller, more granular time frames, more intermediate, but once you start to step back a little bit and look at the bigger picture, you're going to see a stark difference. So let's just begin with, I can understand Alan's bullishness. Based on the 5-minute, you've got a very well-defined trend up. Going back to, again, middle of last week, we were trading below $48, back to 50, well, just shy of 51.50. Again, a 5-minute candle chart. My eye was drawn to 3 areas of consolidation. They're forming value at a higher and higher level. So, yeah, we're trending higher on this look at price activity, but that's a short-term look at the most recent move up. And you can see on this chart, that's the move up we just looked at, consolidating again just below this $51 level. And this is just one of the areas that form. This is a 15-minute candle chart. You've got a few areas here as well, 45, 48.50. So bullish pattern as long as we hold above 48.50 currently balancing again around 50-60, but take a step back with me. Look at a daily candle chart. You can see this is not what the bulls were looking for after we topped out last spring. We're talking up around 64, 65. Look what's happened since. As we were forming areas of value at higher and higher levels, again, a very bullish pattern. We balanced out around 57, and we were referencing this area around 48 that we formed into the end of last year, or end of 2022, beginning of last year. And then look what happened. Into the fall of this year, we saw some weakness, gap down below 48. Here's the way I look at it. I mean, this, again, if we start to roll over here, it just kind of feeds into the weakness we've seen, a series of lower highs coming into play. Yeah, the bulls could be trying to turn something around here, get through 57, you build momentum here through the middle of this range, but right now it's very random and definitely has lost conviction that we were seeing to the upside.
So I'm gonna play on your words, if we roll over. So I'm looking at this fact that the stock is essentially unchanged last year compared to the overall stock market. We're trading sideways, and to use your phrases, your trading phrases against you, this consolidation is building a base and is building energy for the next move. And obviously, I have a bullish bias based upon what I see in my indicators as the leverage buying, and I also see the bullish divergence bottom that we had back here in October. So there's a number of positives. So the way to play, I'm looking to play the June 45, trading for about 850. It's deep in the money. We've been between 45 and 55 for 5 months. A breakout of this range starts 65, and right now we're at the midpoint of that range and right at that 200-day moving average. So what I'm looking for here is some sort of catalyst. It's not my job to figure out what the catalyst is. It's my job to figure out how I think the market's going to move, and that's what I see with my indicators, and the math sets itself up that I've got 6 months of time for something to happen. To be long in from 45, I don't think that's a gamble.
All right, I'll take last word on this one. What I'm saying here is, yes, if we roll over, but this all kind of feeds in what Alan's just saying. He's also creating scenarios that might happen as well. It's very random at this level is all I'm saying.
All right, guys, can we make it 3 for 3?
No.
Clear, secure. We got you.
We got
you, the stock ticker. Now, this is the company, for those not familiar with this ticker, maybe not as well known. This is when you're waiting in TSA pre-check or the other line. This is the one that has no line at all. So this is that area where they scan you and you just go right through.
All right, would you rather be a shoe salesman on an island where nobody wears shoes or everybody has shoes? So you have to think about it. Maybe there's opportunity there.
Wait, you don't need shoes on an island. What are you talking about?
But if you're a shoe salesman, you've got an unlimited market. If nobody has shoes.
You have your feet in the sand when you're sitting on an island.
So I didn't know what it did. I just saw it was software company. I trade what I see, and I saw my indicator light up that there's large leverage accumulation in the stock. So somebody sees something. Some intelligent a person is using the options market because they get the best payoffs with that. So someone's accumulating large positions. It's not just unusual option volume. This is a way to measure the money flow, and that's what I look for. So I'm seeing money flow into this stock, bullish money. I also see the bullish divergence with that low in October. Now, we've been between 15 and 25 for 6 months. We're right above the midpoint right now. And so this option doesn't trade, I wouldn't say this is liquid, but I'll trade anything, anytime, any direction, any market. As long as I can get in and out, I can control my risk. I know what my maximum exposure is, and I'm going to use limit orders and something like this. I'm looking at the 18 and 45 strike. I guess it's an unconventional strike because of a stock split or something. It's trading around 450. It's $3 in the money. It's a May option, and you got to remember that this stock was at 65 in 2021.
Yeah. So similar strategy. You noted kind of goofy strikes, not non-traditional, either special dividend or stock split or something, it seems. Liquidity maybe a little bit.
Put in a limit order. Always put in limit orders.
You look at, they're only 30 cents wide on the 1845, so a little bit better in that May cycle.
I know I'm a lot older than you, not older than Ben. But we used to trade the OEX, and they used to have $3 spreads in the options. So
you're saying we've gotten too used to these beautiful markets and things like Apple?
Market's efficiency, first of all, there's no commissions anymore, and the spreads and options is 5 and 10 cents. So, the barrier to entry is essentially zero. But you want to make sure that you're not over trading because of that.
Okay, we all know with age comes wisdom. I'll be quick here. When in doubt, zoom out.
This is a bad chart. It's made a bottom.
Alan was talking about what people are seeing in this one, shares the YOU. I can understand what they're seeing on the short term, but the longer term, I feel like they need to look a little bit closer. Taking a look here, first and foremost, the 5-minute candle chart, 3 areas of consolidation that are formed at higher and higher levels, so we're trending higher on the 5, and similar pattern on the 60, right? These are hourly candles going all the way back to the lows. Back in the beginning of October, we were around 15 up to 24.60, but that was a key failed attempt to get something going to the upside, a breakout to the upside, and we've come back off, still holding above 20, which I think is important for the bullish narrative, but take a look here. You're going to understand why I think that this stock is struggling still. When you look at the daily time frame, let's just show you areas of consolidation going all the way back to the summer of 2021, Alex. This stock was up around 65. Look at this. We've seen nothing but lower highs. This, to me, looks like we just failed at a key area, short of 27.50, roll back over, take out 20, open up a door for a retest of 15.28, in line with the trend we've been seeing. Top left to bottom right. Hard to argue with that.
No doubt. We'll see if it can make a new comeback, because obviously that chart doesn't paint the brightest.
Limited risk. It's a way to position for success. It's putting a chip down, a high probability chip, and I have the right to be long from 1845, which is $3 in the money. So for me, that's my comfort way to trade and way to position for potential movement.
Going out to May, so 130 calendar days. We'll see what happens. Alan Nuckman, Ben Lichtenstein. Thanks for brightening the day up here a little bit, boys. Appreciate it. Trading 360 is going to take a short break. We get back, taking a look at the retail segment. We've got Jan Rogers Niffen joining us to go through the holiday shopping season and what's to come. We'll be right back.